Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 6th of October here in 2020. And what a day it was. We started the session off with Chair Powell talking about the stimulus, and won't really go into news, but just main comments was he had pushed for congressional stimulus in terms of the coronavirus or the economic conditions that are taking place. And the warning was the economic conditions are deteriorating, but it would be nice, paraphrasing, for Congress to step up and pass a stimulus bill. Well, that happened in the morning, and that sent the market with volatility. But by the close, we had a little information that the stimulus was probably not going to happen. And that sent the market. We'll take a look at this perspective first, but just on the intraday chart, this is our ES session. So we had the news right here. Chair Powell spoke within this time frame, the Federal Reserve Chairman, and we just had a range day at the top of this VA extreme, bearish against it. And the news that, oh, stimulus might come. Here it comes, here it comes. Oh, just kidding. No stimulus. So markets don't like what happened today, and they reacted. So we cannot predict the news. I don't want to be under any type of pretense or thought process that, yes, you can predict news. No, you cannot. News is completely and totally unpredictable. But as traders, we have to hang our hat on techniques and levels and probabilities. So that's where I will start today's session. And it's this concept for me. There's a couple of things that go together. So this is the value area extreme. This is the volume profile, and this helps me make trading decisions on a swing basis. So all it is a volume profile, taking a look at the 70%, really 68%, because that's one standard deviation. And the simplest way to show it, when the market's up at the top of the yellow, that means we are at least one standard deviation, typically more, away from the mean. The mean is the middle. If we are underneath the yellow, which is the lower VA or value area extreme, we have a higher likelihood to rotate or trade back up to the mean. This is simple mean reversion techniques. And we'll see how the weekly expected move played right into today's session, news aside. So that's what I'll begin with. When you are a swing trader, we put positions on expecting a probable move. A probable move is not a certain move. It is a probable move. And again, when the market's at least one or up to two standard deviations from the average, from the mean, which is the red line, you may have heard it referred to as the point of control. It's the middle of the profile. This is a 30-minute profile. So in simplest terms possible, when the market is at or near the upper yellow, there is a great statistical edge to see the market trade back to the red, and therefore an advantage to short sellers when the market's at or above the VA extreme. And the same is true. We can take a look at the same thing. Boeing was the number one stock that declined today, but the same logic from the yellow to the yellow. When the market's underneath the yellow, it has good odds to rotate back inside. So we'll leave that. Gold up at the top of the yellow, trades down. Crude, so simply stated, beneath the yellow favors the longs. Above the yellow favors the shorts. And that is true with stocks and, of course, the market. So let's add one more component to that list using the same type of logic. And it's the weekly expected move. Here is the SPX, S&P 500. And Don does this on a daily basis with us here on TheoTrade. When the market's up at the top green, this is our TheoTrade shared indicator for the weekly expected move. Kind of a back of the envelope way to get your expectations of the potential high for the week or the low for the week, or at least in terms of just hanging your hat on something, giving you a statistical advantage to go short or be bearish when the market is above a green, and go long bullish when the market is beneath the red. No, it does not always work, but it's simply a framework of probability. That's going to be true in all of our equity futures. The futures levels are a little bit different than the index levels, but still, You can see the market pushing up into the green, back, from the red, up, from the green, down, from the red, up, from the green, down. Just a way to frame your trades. And the Dow fell just a few points really, shy of that move. Now, that is how we frame the trades. Putting on the trades, managing the trades, and of course being confident in this probability. Not a prediction, but a probability. Yes, that's the hard part. And this is a short-term type of play. Now in today's market, once again, we talked about stimulus, or the Fed talked about stimulus. And by the end of the session, that was, at least by a tweet, taken off the table. But before that happened, our strongest sector of the day, and that's why the Russell index, Russell 2000 small cap index, why that was so strong. And that's because financials were up. Some of the leading names in today's market that actually closed positive in some cases were financial stocks. And they took a hit when the market was clearly not going to provide that stimulus. But same logic will take place on the profile of all these names. So again, here is the S&P. We can take a look at NVIDIA, pulling back inside. Try to find some financial stocks in the list. There's Costco, just for fun, right? Costco. Take a look at Nike, retail name. There's our first one, AIG. So these names, Goldman Sachs. The leading driver of the market today was the financial sector, but that fell apart into the close. So that's what the news will be going forward. We still are in this headline risk tape, and those headlines can come in either direction. We have a stimulus bill passed and ready to go. The market's going to surge to the upside. We don't have a stimulus bill. The negotiations are off the table. It's going to collapse the market. So that's going to play into your bigger picture and intraday levels and increase the risk for all traders. So as we go forth throughout this week, it's just Tuesday, right? Tuesday the 6th. We have a lot of political headlines, both on the presidential, debates, election, and of course, congressional stimulus. A lot of things that are outside of those perspectives, but just keeping it to those topics, that's going to increase the risk. Scanning through our intraday charts, once again, these levels come into play. From the yellow to the red, the mean or the average, above the yellow, play to the red. That's intraday and swing tactics. The market does not like uncertainty. And some of our weakest stocks that was key to today's session in the Nasdaq were actually the monsters of tech. And that includes some of our trending names off the open, which was Amazon. So as you're looking up at your positions or trading into these levels, Amazon was a trend day to the downside and was one of the weakest names. It fell 3% today. Apple was right there with it, with a gap to the downside and a trending action lower. Joined by Netflix, but not that big of a market cap compared to the others. And of course, PayPal. Now, let's get to the bigger picture. This is our weekly expected move. Remember, we were down here and we had a bull thesis to pull up away from. It was the exact opposite. Lower weekly expected move down here and the lower value area extreme. And the market rotated up. Now it's a good chance for it to rotate to the downside, driven in part because this lack of stimulus or this news that just broke right as we are about to do the video, right as the market closed. The stimulus talks, at least for now, are off the table. Now, even before that, we talked about this pivot point in the other video for tech stocks and tech names. That includes Amazon at 3,200. Apple, right? Little push here, held resistance and did not break above 120. That will be the key pivot point. That was from last week's video. That was Thursday's video with the market into this 120. And Apple has stalled beneath it. Netflix remains above, but still holding resistance. PayPal, just a interesting name alongside. And of course, Google. Google is in trouble. That it fell all the way to that 200 simple, bounced back, and traded back into. So as we look and gather the positions, the odds favor a little more downside action. We have to hang our hat. We cannot predict news. We can't predict when the Congress is or is not going to have stimulus passed or not passed. All we can do is trade. So the spreads, in-out spreads, vertical spreads, when the market's above the yellow or at least overbought, that's a good chance to put a position on bearish. And when it's underneath or rallying up, that's a good shot to be bullish, just in the short term. And that plays into these moves. So we'll finish with looking at the daily chart of the S&P, which is playing down against 3,400. The Nasdaq is playing down from 11,500. These are key levels to keep in watch or in focus. The Dow off of 28,000, and we saw it all throughout today's session on the intraday frame. The Russell against 1,600. So as long as these levels hold resistance, the probability for the short term does favor additional downside rotation or price movement. And that does favor the positions that are bearish, defensive, or hedged. This market is a headline risk, and that involves both directions, bulls and the bears. But if stimulus really is not going to come until after the election, you might see a market pull back even further than we're seeing now, because the market wants stimulus. It didn't get it, and the market threw a temper tantrum. It gave fuel and profit to the bears, but squeezed a lot of long or bull traders. Please be careful. Please be safe. It's Corey Rosenblum with tonight's Theo video for October 6th, 2020.